Hi guys, and good morning. Tuesday the 16th of April from London, just gone 7:30 here in the office. I think we can all start by saying our thoughts are with those in Paris affected by the horrible catastrophe of Notre Dame burning down last night, and Macron has already come out and said they will do what they can, or everything they can, to rebuild that wonderful masterpiece. So thoughts, of course, with that situation there. The pictures last night were hard to take, I'm sure, for many people. As we look over the markets from yesterday as well, we can just have a quick look here, and just talking to someone here about the volatility or the volume in euro and pound yesterday, the lowest it's been for quite some time, and we were very much stuck within a range, certainly for the euro. If I just bring that into the picture here, you can see very small, didn't quite make Friday's high, didn't come down even to the pivot yesterday in a range on the futures from 113.81 to the high to the low of 113.58. So very small range. What was the high that we had back on Friday morning and Wednesday sort of area as well, has acted as a good level of support this morning, come down to S1, and it's now contained within a smaller range. But yesterday was a pretty quiet day for the majority of the markets. The pound as well drifting higher, yes, but again the volume not really offering too much in the way of momentum either direction. The S&P will come on to stocks, as earnings are the main focus now as well, in a bit more detail, but you can see that 2900 handle just acting superbly. I mean, we went down to 2 ticks above it on the futures. I remember talking about it at the time. It'd be really interesting to see what happens and how we close on that level. It was obviously the 6 times tested before that on the previous days, and since then it's pushed on, and we're now 15 points above. So really key level on that first retest of the 2900. More earnings out today as well to keep an eye on, but a decent reaction there in the S&P. Also yesterday, one of the main moves, or if not the main move, came for the CAD here. You've got the Canadian dollar against the US dollar, so Canadian dollar weakness here as the business outlook survey came in a lot worse than expected. We can see here the reaction has pushed us down to lows that we had from last week, and really actually quite a key level to keep an eye on. We had really good support here back on the 5th, and then on the 11th, whatever day that would be, Wednesday, and the test there this morning just holding up so far. Having a quick look at the headline, well, we'll actually have a quick look at oil, as that did just throughout the morning, and then into the sort of the post open did drift lower as well, and this was one of the main movers yesterday for oil. The range trade from that high at 63.74 was good, but even then not the biggest range for oil, to be honest, at all. We'll have a quick look over some of the headlines from overnight, and to be honest, it's likely going to be a relatively short briefing. There's not too much in the way of new developments or new headlines that are coming out. The calendar, however, is pretty good today, a lot better than yesterday. It's going to be a lot better than Friday, and we are now getting into the main part of the week. You know, the earnings coming out. Wednesday is a good day from a data point, as is Thursday. So if you held back yesterday and didn't get too involved trading, it's not the worst thing at all in the world. Overnight, Asian stocks, they were stalling. We just saw the S&P, how it did drift lower for the main part of the day, and we did finally have another down day. But yes, Asian stocks still stalled near their 6-month highs, and investors very much now focusing on US stocks and how they perform with the earnings. If we go back to last Friday, JP Morgan did beat expectations, and the Dow Jones, albeit a bit delayed, did push higher into the close on Friday. You can see if I just bring the Dow here. So it had been pushing higher into that morning. We had the earnings that came out, and we did then push on into Friday evening. If I just circle or square the rest of that session on Friday. So JP Morgan did come in better. However, The earnings yesterday that we saw from Goldman Sachs were slightly worse than expected, and Citi wasn't much better. So stocks did come under a touch of pressure, but once you got down to that technical 2900 level, we have since then pushed on, and Asian stocks have done so as well. So yeah, it's like I said yesterday, and even in the strategy report, I think even if the earnings aren't great, we're going to keep going high. We're going to get that all-time high as sentiment still is very much with the buyer, and with 2017 type trade where you're grinding higher, and any dip like down to 2900 in the S&P is a place where you can buy to continue a market that is just going higher. So any dips at the moment, albeit controlled, are areas I would still be looking to get into, to get long for US equities. The Dow Jones yesterday obviously underperformed, or didn't perform as well as the others, although you can see from a technical point of view the Nasdaq did have a really decent push lower on the sort of the lower volume of trade, but also as it broke out a bit of a range in the market of that trend line and snapped back down. But where did we fall down to? Really good area support, lower the 11th, just like how the S&P found support, and we did push higher. So those dips very much still a case of being bought. So sentiment, where's it going to come from, if it's going to change at all? Of course, the Chinese trade talks have sort of been put on the backbench for the moment. We saw positive data out of China on Friday, which signalled that the lending was improving, and of course these are the two biggest economies in the world. So if they're lending more, for China, and US is also doing well, stocks are going to love it and keep pushing higher. Investors looking now to the US earnings, so we do have Netflix out today, which will be one to keep an eye on. We also had some dovish comments as well yesterday, not that that's going to be any surprise at all, which is going to help the cause for if you are a bull in this market, from Fed's Charles Evans, Chicago Fed president, who currently sees rates on hold until the fall of 2020, saying that the Federal Reserve may need to cut rates if inflation falls. So again, dovish comments supporting this market, but that's very much been the case since early January here as well. However, there is possibly a touch negative sentiment about these earnings. We talked yesterday about the recession fear of the quarter, or the second quarter earnings, and how they're going to be, two negative quarters in a row, and the recession fears are going to start climbing again. But again, it's not new news, that is to be clear. However, a lot of the recession fears were prominent in the market at the back end of 2018, where the markets were coming down quite strongly. So if we were to see the hard data coming in as negative, the earnings were negative across the board, then this might start to take place. Of course, Donald Trump would have something to say about that, as he would definitely make comments on what the Fed have done and how they've restricted his stock markets from going another X amount of points to the upside. But there has been some negative sort of comments here. You've got a strategist from BlackRock saying we're going into this earnings season with the most pessimistic expectations in earning revisions ratios since 2016. But stocks are 1% from their all-time highs. So I think there's going to be every down tick in equities, every negative cash open, every bit of profit taken. There's going to be a couple of reasons that reports are going to say trade talks are not going well, or global slowdown. Literally being the last sort of 3 weeks any negative tick. But we're in a market that's trending higher. I think something massively would have to change for us to start coming down, and with the central banks continuing to be dovish, I think it would be, the main thing that might have to change is that we see US data get really, really good, that the Fed are in a position where they have to increase rates, and it's not like the data across the globe at the moment is that strong. So for me, stock markets go higher for, I don't know, the next sort of 3-4 months at least. grind higher. There will be, of course, a bit of an interesting battle around that all-time high in equities, you'd imagine, with the just an area to take profit. If we just have a quick look at that chart, you can see the reaction from the low up to the high, just how smooth it's been, with only a period of sort of 3-4 days at most where it's just really come down, not far away from that all-time high. Can we get it this week? Another 30 points? I mean, earnings could get us there. I just worry that with effectively only 3 days left of the week, with Good Friday and then Easter Monday, that volume might not allow it, but it seems inevitable. Whether that comes in this week or not, less so. Also, focus of the market overnight, WTI drifted. We saw it wasn't a big move at all, but after the longest run of weekly gains in 3 years, so along with the S&P, if oil keeps pushing higher, then stocks are also going to love that. Interestingly, still, if we go back to the chart and look at that oil chart, we've talked consistently, or constantly I should probably say, about this area, and 65 to be exact, to the higher point of this resistance zone with the June and August lows from last year. It's just a really good place to take some profit, and I think that's what you're seeing here from a key sentiment point of view. You've got the previous high we talked about yesterday in the morning at 63.04 was the previous high from the 3rd of April. Also a good price action point going back to November last year. You can see the reaction we had from there was good, worked well yesterday. If we can get below there, then then you get a further run down to perhaps sort of 62 area. But for now, it's holding quite nicely, and from those highs, we're currently only $1.70 off. But as an area goes of taking profit, it does look pretty good. Another move that we saw overnight / this morning in the Aussie dollar. If I just bring this into picture here, you can see it did move lower, not massively, but we are looking to test, or did we get a test? Not quite, of the morning high that we had on Friday, dropping it down to a 15-minute. You can see in the early hours we did drift lower. This was all saying the RBA that we're talking about how the next move could well be a rate cut, and especially appropriate if inflation stayed low as it is and unemployment trended up. So an interest rate cut there would obviously see further downside here for the Aussie. One to perhaps keep an eye on throughout the session. Any comments from RBA officials on that, and source comments as well, as this market has had a nice recovery from those lows going back to March. You can see we have been pushing on, but this negative headline overnight from those minutes just weighing a touch on the Aussie. But this isn't the first time they've talked about interest rate cuts. Going back to late January, there were talks that the next meeting is going to be a cut. So how much further it can go just off this, I would say, is limited. So maybe if we can get a move down, and I appreciate that's still 30 ticks away, but to the lows that we had back on the 11th and 10th, as a range trade goes, is a pretty good level to get in, I would say, as well. Also, just having a quick look, we saw European negotiations get underway, or they got the green light to go underway, I should say, with the US, with a target of getting something done by September. Also, US and China continue to talk, and the latter is considering a request from the former to shift some tariffs on agricultural goods to other products, just as US soybeans shipments slump. All in all, the four biggest economies in the world are now gripped by trade negotiations, and that comment from Bloomberg is absolutely true. Yesterday marked the start of a 2-day, finishing today, talks between the US and Japan. By all that it seemed, and we'll have a look at the article in a moment, it did seem positive. You've got the obviously US and China all mixed in that. Then you've got the US and the EU getting ready to start things on that. You probably saw yesterday or early hours of this morning Donald Trump tweeting about the trade war with China in typical Trump fashion. We're going to win either way. We're going to win with a trade deal, or we're going to win without. And would you expect any different? I don't think so. So here's that comment. Just again, we're going to win either way. We're going to win by getting a deal, or we're going to win by not getting a deal. So yeah, it's I don't know. Trade talks have been going on for what, 9 months now, and if you were tired of Brexit, you're tired of trade talks, that they're going well or whatever. It seems like it's perhaps drifting to a conclusion, but also the market's got a bit tired of these headlines and almost just forgets about them, I would say. Mnuchin said earlier yesterday that the trade negotiators are making a lot of progress. Again, not new. He told Fox that there is more work to do, however, including enforcement. So yeah, limited reaction off that. I think for a while that's going to be put to the side. I don't think the focus on these markets is going to be US-China trade related, as earnings season just comes into the main port here, port of call. So moving on, you also had those talks from Japan and US. You can see here whole frank and good trade talks. The Japan's economy minister overnight said how they were good, but stressed that currency rates should be discussed in a different context between finance ministers. Obviously the US want to avoid any more allegations of currency manipulation, I'm sure. They had a frank and very good exchange on views on trade issues. They declined to be more specific, but would talk more after second day of trade talks today. Now, of course, you have the Golden Week approaching for Japan, where a number of trading days will be missed due to the holidays, but also the Emperor secession happening, and a day after, 2 days, a day before and day after our holidays now as well. So the volume certainly for the yen is going to drift lower. But comments at the back end of today's session will be worth keeping an eye out for there, as the final day of those 2-day talks are ending. Also, as we push into late April now, or in a week or so, you've got Abe is scheduled to meet Trump in the US in late April for talks on North Korea and Japan-US trade. So something to maybe make a note of in the diary as later this month they do meet up. And also over the weekend, didn't really talk about it yesterday, as wasn't too market moving or of note, but you had certainly had Trump and Kim Jong-un talk about meeting up again. So I think Trump was saying how much potential they had, which of course is a lot different to what he was saying this time last year and before, where he called him Rocket Man and such. But that will be again something to maybe look at in the future, how that develops as well. Just at the corner of my eye, I've just noticed the DAX just coming under a bit of pressure here, coming into 8 o'clock, so it will start to pick up. You do have a gap from overnight which hasn't been filled yet on an electronic trade, so while it's a small one, just keeping an eye on that. You can see over the last sort of hour or so we have been drifting lower in European equities. The Euro stocks just lagging a touch behind. The follow through to US limited at the moment, however we have just found a bit of resistance, again probably profit taking on near yesterday's high in that R1, but one to keep an eye on there for the DAX, and potential for that gap fill as well. So I mentioned the EU got the green light for talks to crack on with the US, and they're ready to start on a trade agreement with the States and could conclude a deal before the end of the year. So they're expecting this to move quickly, but as we know, the likelihood of that actually happening as said is not all too likely, but that's looking to start soon. So just on the horizon of potential areas that could see, well, equities in general, but sentiment change either positively or negatively is going to be based on, of course, these trade talks with Europe and US, but also Japan, and how it concludes with China, as well as earnings to come as well, and also of course what the central banks do. With not long now, I think what's that, on the 1st of May you have the Federal Reserve, so that'll be an interesting meeting to keep an eye on as well. A Commission survey estimated an agreement on industrial tariffs would increase EU exports to the States by 8% and the US products bound for Europe by 9%. Malmström, the commissioner, European Trade Commissioner, approved 2 negotiating mandates proposed by the European Commission. Of the 28 European countries, EU countries I should say, only France voted against. Not too surprising why. Obviously you've got Germany that are really pushing for these talks because of the amount of cars that they send out there, making over half of the total EU amount. But you've got France on the other hand, who are probably saying no, or are definitely saying no, because of the climate change situation and Trump's withdrawal from the Paris climate agreement. So you've got to give it to Macron. He stood firm in the Brexit negotiations last week, where he said he didn't want a long extension. You know, he wanted the same as Theresa May, a quick one. You know, he stood up for what France wanted, and he's doing it again here. So fair play, you know, standing strong. But it looks like that will look to get started shortly. But I push that more down the line of importance and potential risks that could come from it. On these talks, the Trump administration last week proposed targeting a list of $11 billion worth of EU products for tariffs ranging from large aircraft to dairy products and wine. And then Brussels, on the flip side, drew up a 13-page list of some 20 billion of the US products, including fish, tobacco, suitcases, planes, video games as well. So the Commission will publish its list on Wednesday, so tomorrow, as part of the public consultation. So it seems like the end of today you'll know a bit more about the EU, the US and Japan trade talks. Wednesday a bit more about the EU and US. The China, if it's going bad for stock markets, well, the trade talks will be going all well. You'll hear comments like that coming out, I'm sure, but that seems to be drifted later on. Also, I mean, it's an absolute pleasure to not have to talk about Brexit for the last couple of days, with the break until the 23rd of April, so this time next week. The headlines are limited, absolutely limited. You can always tell with a Brexit day if it's going to be of significance if Laura Kuenssberg is tweeting. And the fact that I'm looking at her Twitter right now, and the last tweet she sent was 3 days ago, so it tells you everything you need to know. The volume in pounds is going to be limited, so if you like a range trade and you don't want to worry about a source coming out for the pound, I'm tempted to say this is the time to do that, just as the DAX fills that gap. But the only real headline overnight of any significance, if you can call it that, because the comments are dubious, as we'll go through. Germany warns Britain it cannot have further Brexit extension. I'm sure they would have said this before. We can't go. They will have to decide what they want by October. You cannot drag Brexit out for a decade. I'm really clutching at straws for a Brexit headline to talk about here. We do know, of course, that the deadlines that have been put in place before have been extended anyway. Europe, who said they weren't ever going to extend, have done it twice. Theresa May, who said they're going to leave with a deal or not on the 29th of March. We saw what happened there. Having a quick look over at the calendar, as it does get a lot more exciting today than yesterday. Coming into it's just gone 8 o'clock now, so obviously focus on the European Open or the London Open here. But at 9 o'clock, 9:30 I should say, sorry, you've got the numbers out of the UK, so the average week earnings will be one to keep an eye on there for X bonus as well. 3.4 X bonus, 3.5% for the other expected for that year-on-year figure, so a slight increase expected. Going into 10 o'clock, you've got the ZEW survey from Germany and Europe, one to focus on there, as we have expected, or we are expecting to see a bit of an increase from a negative reading last time out, but the range high to low is quite big, so you would probably want to see quite a significant move for anything from that. Then it goes a bit quiet over the lunchtime break between 11 and 1. I wouldn't expect too much in the way of movement. Industrial production out of the US at 2:15, along with manufacturing output as well. So 2:15, a couple of numbers to be aware of just before the cash open as well. Then you've got the API minutes, API weekly inventories. Last week we saw a tricky reaction where gasoline was a big draw, biggest since September, but we also had a pretty, well, a half decent build, but that was confirmed as a bigger build for the DOE on Wednesday for crude, as that came in at 7 million barrels. Also got some Kiwi CPI data to come overnight before tomorrow morning. We've got a couple of speakers as well to be aware of. But some decent earnings out of today. Netflix, Bank of America would be the ones that I'll be keeping the closest eye on. Any questions, as usual, please do let me know. We'll have a quick look over the charts throughout as well, just seeing here that DAX has filled the gap there, really good level, and just people taking profit off of that. You'll all be pleased to know that Anthony is returning tomorrow. He may even be watching the briefing now, as I know he did arrive, I think yesterday. So he'll be back in the office tomorrow, and he'll be pleased to get back on the horse, I'm sure. But I hope you all have a great trading day, and good luck with the session ahead.